Welcome to Breaking Bitcoin, recorded live in the underground quarantine bunker. Live Friday, March 20th, 2020. This is your daily source for everything markets and finance. If you're watching on YouTube, make sure to subscribe and turn on all notifications. Leave a like below the video and comment down below letting us know what you've learned today, what you'd like us to cover on Monday's episode. If you have any questions, drop them in the live chat. The moderators will direct my attention to them. Hopefully you guys are all doing absolutely fantastic today. I want to remind everybody that we are having our Bitcoin trading competition. We are utilizing the time to grow as traders and individuals. We are having a month-long trading competition. The current prize pool is 0.11 BTC. You guys can head over to ByBit, reg.crackingcryptocurrency.com to register and trade with us for the next 30 days. Registration is open for the next 2 days. So come join our community and flex your trading skills, test a new strategy, or show up some of our junior analysts, maybe even our senior analysts. I'm looking forward to the games. Link is in the description. That's bybitreg.crackingcryptocurrency.com. We've got a lot to cover today. We're going to be covering the STEEM hard fork and its movement to the upside, the situation with Justin Sun. We're also going to give a brief update, of course, what's going on around in the world today. This is officially the worst week for the Dow since 2008. And looking at all realistic metrics, if we look at how overvalued the stock market still is relative to actual earnings and corporate profits, we still have quite a long way to go to the downside. More states in the United States have now issued shelter-at-home commands, most recently Illinois today, with a large number of cases in that state as well. National Guard mobilization, which we talked about, which I said would happen. And again, you want to be very, very careful between talking about the difference between martial law and mobilizing the National Guard. There is a drastic difference. And what I'm seeing on the internet for the last few days, and this always happens in moments of crisis, is conspiracy theory nut jobs come out of the woodwork and confuse the difference between mobilizing National Guard and martial law. It is a drastic difference. Martial law has not been issued in the United States, nor will it, unless we are drastically living in a different world, which is not true. But the global economy has screeched to a stop, even as China and manufacturing in China has come back online. Unfortunately, second waves of infections have now been reported in South Korea and in China as travel restrictions have been lifted. And over the next few weeks, you're going to be hearing everybody, all your talking heads, talk about the reality of a global recession that we are currently in, not just the possibility, the reality. And coming to understand that things are going to fundamentally change. I mean, you cannot, there is no V-bottom recovery out of this for financial markets. GBU Wally, thank you so much for the $4.99. Might as well add ProShares to your analysis and forgive my told you so that might be said. Oh, no, not at all, brother. We were covering ProShares. I'm glad you got in on that one, my friend. Absolutely. We will cover it today. Yeah, so there is no V-bottom recovery out of this for traditional markets. I've talked about this before. The Federal Reserve cannot helicopter enough cash around. The reason why is because inflation is caused by the increase in the supply of money without a resultant increase in the supply of goods and services, or the value, the dollar value of the goods and services that are available in an economy. And what's happening by bringing the entire global economy to a screeching halt, all around the developed world, by forcing quarantine and forcing restriction, is an absolute gutting of the quantity and dollar value of goods and services available. So even if the Fed were to print themselves out of this, they mathematically cannot. They mathematically cannot, because hyperinflation or very noticeable short-term inflation will not happen in the United States quickly. It will take 6 to 9 months at a massive scale. And there's bigger problems than that. Like, for example, the populace will not deal with being ordered to be sheltered that long. It's not going to happen. You are going to get a resultant increase in crime because people are not going to be okay with sitting at their homes, being unemployed, watching their business be collapsed, watching their job lay them off, watching food dry up in the stores, watching the availability of goods and services dry up, and those things will happen if they don't let people go back to work. So realistically, all that we're going to be able to do by looking at what's going on over in South Korea and what's going on over in China, even as they come back online, we realize that the most that we can do is utilize this month of being locked down as best as we can to ramp up production in the free market, to expand on the hospitals, to get more ICU beds, to get more ventilators, because following that, the downside of attempting to keep people at home outweighs the negative impact of deaths from the cerveza virus, right? Which we will have to use. It's just not going to work. More people there's going to be more suffering and more chaos that's going to be caused by grinding the world economy to a halt with this command and control view. And as you know, as a libertarian, as somebody that wants less government involvement with something, the reality of the situation is that the best that we can hope from being on lockdown for a month, essentially, is that we do get a ramp up in the free market of production of, hospital expansions and greater ICU availability, so that we can lessen the impact when we let people go back to work, because they're going to have to. We're not going to be okay with just staying at home. So that's what's going to happen. After about a month, they're going to slowly let people out. Or I don't even want to talk about it that way. They're going to be forced to allow people to return to work. They're going to be forced to allow people to open up their businesses. And if they don't, they're talking about a significantly worse impact that is going to be bad economically. So, anyways, that's where we're at. We don't know much more than that. A lot of this depends. I've talked about this a lot. About what currencies will go up, what stocks will value up. Again, we're going to see some slight. It's interesting. But anyways, we'll get to that when we get to the market. So, but again, the overall narrative still remains and still maintains. There is a fantastic opportunity out there, even in down markets, for people to improve their lives, improve themselves. Strength is found in local communities, in yourself. So again, make sure that you're pulling together with your friends, your family, your loved ones, focusing on the things that you're good at, utilizing your time as best as you can. Again, there is nothing that can, even government can't suppress the free market as much as they would like to try. Again, China's a large amount of China's success over the past decade has been by them adopting a more free market economy approach to how they do things, even with a totalitarian regime overviewing everything. So I expect to see that. I expect the innovation to come from the free market. I expect the solutions to come from the free market and not from government, because bureaucracy and government is terrible at doing things. If you look recently at how the CDC really cocked up the allocation of testing kits, and all they can do is attempt to cover their own butt, because it turns out that when you have a massive bureaucracy that is shrouded in red tape, you do not get efficiency. You get a massive government machine that just wants to cover its own behind. So again, we're having issues on YouTube. Notifications aren't going out. And this is largely because we cover what's going on and we talk about cryptocurrency. And this is just the reality of the situation. So listen, guys, if you enjoy the content and you enjoy the show, make sure to turn on notifications, or they're just not going to tell you. They pretend that our channel doesn't exist. So anyways, guys, let's get right. We've got a lot to talk about in the markets. We're going to break down today. We've got some action coming out of BTC right now as we kind of breach the DBL on the lower time frames. We'll go and look at that. Remember, that's not confirmed. You don't get overly excited about that. Even if you do take the LTF signal, the lower time frame signal, you do want to wait for a pullback statistically. But let's talk about that when we get to the markets. Let me see, make sure I don't forget anything before we get over there. Okay. Yep, we're good. All right, let me switch this and we will get right into the markets. All right, so here we are at the overall view. We've got the perpetual contracts for Bitcoin, Ethereum, XRP, EOS at the top. We've got Ethereum, Bitcoin, XRP, Bitcoin, Litecoin, Bitcoin, and the CME futures over there on the bottom. CME futures closed today at about 5,900, ended up closing at 5,975, almost 6,000. So that is going to be a fairly significant gap, looking at about a $400 to $500 gap, depending on where I expect kind of price to float overnight. Again, we'll see what happens over the next few hours and going into the London Open. But that is going to be an interesting potential gap to fill. And of course, you're going to see that come out. So let's go to BTC USD. We're going to ignore current price action for just a little bit as we break down the activity from today. Let's go find the daily close, which for me, right here. Daily close is going to be 1900 for me. All right. So let's just take a look at what we have from the daily close. So one thing that I want to do is, first off, I pushed 2 updates to the baseline premium indicator today. The features that I added were multi-time frame functionality. The other feature that I added was I updated the qualifier no trade zone condition and added the qualifying line to the baseline indicator. So in the settings now for the baseline indicator, you can turn on show entry qualifier, which is very good for daily time frame or meso time frame setups to make sure you're within the optimal entry area for a trending signal, for a primary signal. So you can turn that on or off. Here is the multi-time frame function. You can set the baseline to whatever you like. Now, take profit and stop loss are still calculated off of your close. The other feature that I added is in the baseline source, I hard wrote all of these values so that I could add in Heikin-Ashi close by request. Some people had wanted to see the Heikin-Ashi smoothing of the baseline or of price, essentially, the smoothing of Heikin-Ashi close on the regular Japanese candlestick market. So I added that. Take profit and stop loss is still there. You can still override the automatic trend detection. You can adjust everything here. I removed some of the, in my opinion, cluttery moving average settings. I hard coded them to, in my opinion, the optimized settings. We'll see what the user feedback is on that. I don't think there's going to be a big problem. That does reduce some clutter here in the input window. And then no trade qualifier violation is there. I changed how it worked. Previously, the way that it worked is if price on the previous bar had closed below the baseline, and then on the current bar, we closed above the baseline and above the qualifying line, you would get the no trade condition. And then if within 3 bars, price came back below the qualifying line, you would get the okay to trade. It's a little different now. It is a little different now. Now it's if price closes above the qualifying line, you will initially get that no trade condition, just so you know that you should not be taking this trade. You're too far extended. You're not in the optimal trading zone. And then within 3 candles, if we come back below the qualifying line and maintain our maintain our gap above the baseline, then we're good to go. And the reason that I changed that was just because there's going to be situations where we do not cross, especially on meso timeframes, where we aren't below the baseline before we cross over the qualifying line. So people weren't getting, in my opinion, the best possible signals on the meso. So I optimized that. It still does the exact same thing on the daily, but it makes it now usable on the meso timeframes. Keep in mind that you are going to see a lot of no trade signals on your chart now, because that condition is going to happen quite frequently. Anytime price goes above the qualifying line, and it just lets you know that, hey, you missed the movement, wait for a pullback, and then you can take that initial signal after the pullback. But you're going to have to let this one go, in my opinion. So I added those things. It's very good updates. The next things that are going to be coming out are going to be the strategy testers that I've built. Also the optimizations for Minx that'll be coming out this weekend. I'm going to be pretty much spending all weekend publishing code, updating all of the major indicators. And then what's going to be coming out very, very soon following that, we've been doing a lot of work on these, is going to be Meso and LTF automated strategies. So from, the strategy tester will be the first piece of that. And then following that will be systems that you guys can put in your chart. So I'm pretty excited about that. It's been a lot of work, so I've been working furiously on that. But anyways, I've got the baseline on here. I'm on the 15-minute chart. I'm going to break down price action on the 15-minute and talk about today. I do have it is generating the daily baseline. It's the Hall 60. So we'll keep that very simple. And then here on the 15-minute, I of course have Minx, and I have this set to the daily time frame filter of signals, the daily time frame baseline filter of signals. Okay. So let's look at where the daily closed. Let's see what kind of activity we had today. Going into yesterday's daily close, we had a lot of consolidation. We generated one profitable continuation short right here. We can see parallax confirmation and Wadatar explosion confirmation. And of course, we're below the baseline. We can see that we hit our take profit quite well. That's a very nice movement. We get another continuation short signal over here. This one is actually a losing trade. So is the short. So moving into the daily close yesterday, starting off with one profitable trade and 2 unprofitable trades. And of course, we are below the daily baseline. So for daily strategies, we avoid this area right here. We do have, let's see here, we do have one CL, one profitable short trade right here, one profitable continuation short trade right here. We have basically an immediate exit of this long, and then after that, so we pretty much have a break-even start to the day for those that were trading basically from the daily close into the early morning, watching that run up. for those who are trading in the direction of the daily time frame. Again, we have a winning trade, losing trade, and then we get a little bit of chop. And then starting at about 10:15 this morning, nothing but winners. I mean, so much winning when you trade in the direction of the daily time frame. Because yes, it would have been a rough evening for those trading last night. Beginning it off to the start of the day, short signal here as soon as we cross back below the baseline, instant winning. Continuation short signal right here, instant winning. Continuation short signal right here, instant winning. We don't catch any of this. We don't care. We're not trying to trade any of this. And we have one losing trade following that. So again, three winning trades and one potential even invalidation, because we get that invalidation right there. That's roughly right. It's not a big help. Now, what's interesting here on the lower time frames is that we have closed the 15-minute candle above the daily baseline. Minx on the lower time frames here is stretching in overbought territory. So this is a movement that I'm pretty wary of, especially with how the CME futures closed, expecting that to gap down. And overall, again, we can see this nice double top swing failure pattern. This is, again, the one pattern that I do reference once in a while. Again, we can see the high that's put in, nice reversal candle, failure to make another high, and then we close and breach below that lower low. That's your price action signal to take a short, and you would have been highly rewarded for that. And we are coming back up to that level of initiation right there. We reject from it right here. We consolidate for a little bit. We are attempting to break through. I do think that we do see a little bit of more upside momentum going into the evening, although don't really have a lot of conviction in that. I'm not going to be trading this evening. I've already put on my trades for the day. We'll go to the mesos and we'll go to the dailies, but overall, I do expect tomorrow to close fairly negative, particularly if we look at the ESs, again, having a very rough close, basically just plummeting off the face of the map since the daily close. Talk in the United States, Trump floated the idea. He's like, oh, let's just shut down the markets. Let's just stop stock trading entirely. Good luck with that. Although, again, it's possible, man. This is a crazy world. We're seeing all kinds of crazy things happen right now. So anyways, it was a good day for BTC USD trading. Let's actually go out to the mesos right here. 4 hour, we'll look at the 4 hour right here when we did generate, let's see here. No, not the breaking Bitcoin system. I want to look at the baseline. Okay, so on the day, this is the 4 hour time frame. Again, same thing, daily baseline. What do we get? We get a beautiful reversal baseline bounce. Nice entry right here on this candle close. One had 8 hours to take this trade, right? This candle right here, this 4 hour close, and again, beautifully rewarded for it. Again, a beautiful movement to the downside. If we pull up Quadriga ATR and we show historicals, let's see. So let's see what so take profit 1, take profit 2, take profit 3, clearing all take profits on that wick to the downside right there, driving back down to pretty much the top of the previous resistance, getting a nice little movement off that. The 4 hour is also looking like it does want to close above the daily baseline. Not a confirmed trend flip until we do end up closing that daily time frame above it. So tomorrow will be a fairly interesting close. One that Monday will be a fairly interesting close because it's Friday. So tomorrow is going to be Saturday. So pardon me for miscorrecting myself. We've got about 48 hours before we see. So Bitcoin has some pretty good time to play. I will be fairly conservative taking anything on Saturdays. One thing that I want to point out, and we'll get into this when we look at other metrics, but open interest continues to fall. Liquidity in the books has risen a little bit, but there's not a lot of underlying volume. And one reason we have to understand, why is price so volatile, right? It seems like, I've gotten this question a lot. It seems like just 2 weeks ago, we had like 5% stop losses. And now it's like, just to be within risk, we're looking at like 15 or 20% stop losses, right? Well, the reason why is because the market is highly volatile right now. And why is it highly volatile? Because a lot of money has left the system. The order books are thin. And so it doesn't really take a lot to push price around. Big market buys relatively, or what would have not have been massive market buys or sells like 2 months ago, are now relatively significant market buys and market sells, right? So watch open interest falling. We can see open interest falling, especially if we go over here. We can see it on tensor charts. I'll go to ScalpX right here, and we can see, even if we take into account the plunge here, of course, a lot of open interest left the books, but let's just look more recently, right? We can see, even on these movements to the upside, open interest is not rising in a significant way, right? It has not broached and made significant areas Excuse me, it has not. It is not on an upwards march. Now, again, VC depth is suggesting that liquidity is rising a little bit. Market capitalization has obviously risen 50 billion off of the lows. That's really just a return to the mean. We were already in a bearish environment prior to that. We're still in a bearish environment now. Volume is okay. It is peaking higher than our last peak. We have peaked higher at our last volume peak on the 17th. Again, that movement was in a slightly different direction, but we will digress on that. So again, yeah, millions upon millions of dollars left the cryptocurrency markets, and they have not come back in from spot and derivatives markets. That's why we are so volatile, because the order books are paper thin right now. So again, I think that traders should be pretty conservative right now. There is a lot of volatility in the markets, and it's very juicy for a trader to take advantage of, but you need to respond to that volatility by adjusting your risk, because as volatility increases, so does risk. So you need to adjust your risk. And how do we adjust our risk going in? Via our position sizing strategy. So again, there's nothing wrong with trading these highly volatile markets. We're doing it. I'm doing it. Of course, we're doing it. But the way that you overcome that, the way that you stay safe in this market is to reduce your position sizing, because you don't need the same amount of capital in a trade when you're getting 3x, 4x multiplied price swings on a daily basis. Intraday, you can make a lot of money trading these markets, but if you're not careful, you can lose your shirt. These movements will wipe you out if you're using the same kind of position sizings that you were 2 months ago. Absolutely, very, very dangerous. So we talked about the 4-hour reversal baseline bounce entry. I actually ended up getting scaled into a short right around 6,700 average entry on the daily time frame. Now, interesting area to look for if we end up, interesting things to watch for if we do end up flipping on the daily time frame come Sunday, right? I want to see if we can close the gap come Sunday's close, so really Monday afternoon. If that is what we see happen, then I'll be looking for an optimum area to close my hedge and potentially consider going spot long on BTC, moving to the upside as the daily baseline has moved down to price. So again, not confirmed. We'll be watching that. That's the next signal to watch for and see if we can get some sustained movement to the upside, which if that occurs is going to be very significant, because that's going to be an actual decoupling in trend of traditional markets and cryptocurrency, right? Something that so far is not confirmed. Should that occur come Monday, then that would be something that's really massively interesting to see, and actually makes me really, really proud to be involved in cryptocurrency. I'm actually really, really excited to be in this and glad that I've chosen this as my life's profession, because again, people told me I was crazy for a long time when I left my previous job trading Forex, and now look at me now. All right, so anyways, on the daily time frame, same thing, reversal baseline bounce. Setup that was generated on yesterday's candle. Good opportunity for us for some lower time frame profit right here. But good opportunity for, let me turn Quadriga ATR off. Great opportunities on that entry from today's daily candle, still actually holding the position because my entry was so good. I actually do have a limit order higher, so if we do end up creeping up over the weekend, we will get an optimum entry. Let's see here. So again, yeah, be careful. Open interest is dropping, meaning a lot of open value is not being created in the market. There's not a lot of underpinning support on this movement. Otherwise, we would see some significantly different metrics. And whales are pushing price. Relatively small orders are pushing price, again, relative to what they would have pushed price several weeks ago. So I want people to be fairly conservative. I think this is a good, we'll talk about this when we get into the miners over here. That's about it for BTC. So again, it's going to be interesting to see what we get over the next, few hours moving into the evening here. Again, as we breach the daily baseline here on the 15-minute, we haven't actually closed the 15-minute candle above there. We got about a minute and 40 seconds right there. Should we close back below the daily baseline? Keep that in mind. We're also a little bit overbought here on MIGS, but Parallax has flipped bullish here on the lower time frames. Last time we did that, they get a nice little surge to the upside here. The swing failure pattern and a double tap. Same thing that we can see down here. Swing failure pattern, boom, establishing a bottom. We've breached that high. Let's see if we can hold it. Again, stop loss. I mean, just trading price action. just trading price action. If you were trading that SFP, you would be looking to take that position here with a stop loss right here. Again, not something that I'm going to do, as we haven't closed the daily above, a daily time frame candle above the daily baseline. So very, very wary about this movement right here. All right, looking at Ethereum. Ethereum has far more work than Bitcoin to do. Let's look at where we've come since last night's daily close. It's going to be 1900 for me. All right, so since last night's daily close, let's set this up the exact same way. Of course, baseline, Hall 60, daily time frame for the baseline source is closed. Everything here is fine by default. On Minx, we've got daily time frame filter of signals. Good. Here we are on the lower time frames on the 15-minute. Let's see. We start the day off with a short signal right here. Bam, almost instant profit. 2 candles later. Continuation. Let's get zoomed in here. Sorry. You guys probably are having difficulty seeing that. Let's see here. Continuation short signal right here. Low volatility, but bam, we hit the take profit a couple candles later. Here is a short. So 2 winners and our first loser of the day. Let's see here, but it's cool. We rally back. Here's our short signal, and boom, we hit it. Takes us a couple hours, but we do get it. Continuation short lets us double up. Boom, we hit it again on the very same take profit. Here's another short signal. Boom, struck. Continuation short. Boom, money all day long. Continuation, boom. I mean, Ethereum is like the gift that keeps on giving, and it's been like that the whole day, right? So where was Ethereum's big movement to the upside, which was great. Which was great for BTC shorts, by the way. Bitcoin apparently just completely dropped the phone. I mean, let's look at, so let's find the daily close from yesterday, 1900. All right, so we get a little bit of a brief spike up, and I shorted 2 BTC pairs last night, EOS and XRP. Fantastic trades. And Bitcoin, I just set a limit order up here not too long ago. But anyway, I mean, just falling completely off the face of the map. Why? Because Ethereum is so weak compared to Bitcoin right now. Depai Guy asks, when I'm using the Minx Wadatar explosion combination for continuation, I'm only looking at volume, right? No, I'm looking at Minx, bro. Minx tells you what to do. Minx is your initiator. So Minx says, go short, continuation short, continuation short. And then you just make sure that you're just trading in the direction of the daily time frame. So if you're on lower time frames, now it's very easy to do with the update that I pushed today, because you can go down to whatever time frame you want, set the baseline to the daily time frame, and then set Minx to the daily time frame filter of signals in the baseline options. And then just make sure that your baseline type and length are the same, as well as source. So Ethereum trading today was the gift that that just kept on giving. I mean, I don't want to sound lame, but just so much winning, man. So much winning. Daily baseline sitting above 154.40. So we've got some work to go to get up there. I wouldn't actually be surprised if coming off of this bottom, we do actually rally up here a little bit and tag this. I would most likely like to be short from there. But again, that's about a 13% movement to the upside, but I don't trade in the direction. I don't trade against the daily trend. So that's me. And when you keep things very simple like that, you just take your setups, and sometimes you have good days, sometimes you have bad days, and it's pretty simple. And again, parallax confirmation throughout all of that, parallax confirmation throughout all of this, and parallax keeps us out of this, Wadatar keeps us out of all of this. But of course, if you were trading against the daily time frame, let's look at where the long signal was. The long signal was right here. Parallax confirmation coming in a couple bars later, WADA telling you to get in here, and you could have caught that whole movement to the upside. Exit signals here and here, right? So not a bad move, not a bad counter trending move, but you often won't get that volatility that you need. So again, we're in a no trade zone right now on the LTFs because WADA's flip bullish. Parallax is flip bullish. Minx is flip bullish. We did just get a little overbought right here, just as Bitcoin did. And so we'll see what we get over the next few hours. Just keeping it simple. All right. Sorry. All right, 4-hour time frame here on Ethereum. I mean, again, largely a joke. Wadatar explosion is still has still been bullish, coming off of this bottom right here, flipping meso bullish right here throughout pretty much this whole movement. A lot of these systems doing very well. Parallax flipping finally bullish right here. And again, if you're trading against the daily time frame trend, you do get an option. You do get this opportunity right here. Again, the system does catch this very beautifully, but volume is now waning as we reject from the vicinity of the daily baseline. Again, There is some movement up here to be had. About another 13% to the upside to get another RBB, to get another reversal baseline bounce entry. But we do need to close above 154.40 right now until we're looking at a significant trend flip. So I'd keep it simple. I would keep it safe. Minx just flip bearish. Parallax just flip bearish. Let's see if we can get some follow through on this. Get WADA flipping bearish, and maybe we'd be going short on the meso timeframes. On the daily, we still have we're actually inside the trade qualifying line. So this is a good area to be looking for RBBs anyways. We do get a little bit of waning, we are getting waning volume on Water Explosion. So again, on the daily, I'd be largely flat on Ethereum unless you were looking to take that reversal baseline bounce. Other than that, not a whole lot to do here. The lower time frames are pretty busy. XRP USD, again, very similar. Let's find yesterday's daily close. A lot of volatility here. XRP USD, I haven't taken any trades on this contract. Whoa, hello. All right, so here we are. All right, so again, short signal right here, full confirmation, nice run to the downside, continuation short signal here, nice run to the downside. Let's see here, again, largely staying out of this, but of course the system does catch it. You can see every flame flip bullish, except for our trend detector, the baseline, which tells us to stay short. And then when we get back in right here, get a little bit of chop for about 2 hours, but it comes through, bam, hitting it right there. A losing trade if we take the continuation short right here. But again, the market does give it back to us. Here's another short signal and a little perilous, but boom, grabbing right there. Continuation short, continuation short. Here's a short trade, ended up stopping out eventually, but of course, Minx flipped bullish. Parallax got you out a little bit later as well, but Minx would have been your kind of trend detector there, telling you to get out when we cross above the 0 line. And here we are in the vicinity of the baseline, XRP USD on the 15-minute. Key strategies here would be looking to go short and then flipping your bias if we get back above this level. Pretty simple. Nothing to do right now. As we're below the daily baseline, but our indicators have flipped bullish, we just largely stay flat right now. EOS USD. Different story, man. Different story. Very similar to Bitcoin, and then it did have a pretty significant run up. EOS and Bitcoin were the most impressive pairs, I'd say, to watch. Now, again, EOS BTC was one of the pairs that I shorted, as well as XRP BTC. And those just absolutely fantastic. Although looking at this, I wish I would have just shorted the perps on ByBit. But anyways, again, let's get zoomed in. Short, win. Short ends up being a win. Continuation short ends up being a win. One losing short, and then we largely stay out of this. Kind of the same thing. Oh, interestingly enough, we do get a long right here and grab. Continuation long right here and grab. Okay, cool. So EOS actually let us win the winners on that little breach above the baseline. But here we are back below, and bam, profit, and continuation short, bam, and short. Just very, very simple, man. Today was a very, very, very good day for trading. Very good day for trading. And here we are. EOS USD, very interesting because we actually are above the baseline, closed above it, came back and held it, and we are seeming to hold that level right now. So this is pretty cool to see. Maybe we can get some more upside momentum from EOS USD because on the LTFs here, your directional bias would be flipping. Ethereum Bitcoin, again, this was a trade, not Ethereum Bitcoin, I'm sorry. Ethereum Bitcoin was not a trade that we took today. Let's see here, very similar here on the 15. Just had this nice bounce off of the bottom. If Bitcoin holds flat or holds stable, we can see some upside pressure from Ethereum Bitcoin, but I honestly wouldn't want to touch this with as weak as it's been. There's a saying that stayed with me for a long time, which is, be long the strongest asset of any sector and be short the weakest. And compared to Bitcoin, Ethereum is extremely weak right now. XRP is almost a little bit stronger, not dropping down as much and having some actual decent chop. But I wouldn't actually expect a whole lot of upside pressure from the BTC pairs. I would mostly be looking to short. Again, of course, we're below the daily baseline, so why wouldn't I be looking to short? But even just seeing the weakness at which they've held up. And again, I just want to highlight where the CME is closed. Again, don't get caught, don't get suckered into taking like trending long trades after we've already moved up. 59.75. Yes, we can have lower upwards momentum or upwards momentum based on the volatility over the weekend. I would largely expect ranging, kind of highly volatile chop, and then expect to see us start creeping down come Sunday or Monday morning. All right, let's take a look at the markets. This is officially the worst week for the Dow since 2008. The S&P 500, again, even after putting that exit signal in on the S&P, closing the day at 229.40, absolute bloodbath. The Qs at 177.70. The Dow, the iShares Trust at 112.96. The Dixie actually had a pullback today to 101.95 after its run to the upside. Yeah, this, again, the Dixie's been in a just absolute tear right now as banks around the world clamor for the dollars. Everybody and their mother clamors into the dollar. Yeah, and essentially here we are. Parallax just flipped bullish on the Dixie index. So again, I would actually expect this thing to continue pushing to the upside. Keep your eye on the Dixie. It is a pretty good indicator if you're combining that with kind of your fundamental analysis of what's going on. Gold spot is fairly interesting today. Let's go and throw the new baseline on here. All right, sorry. Gold spot, fairly interesting, but we haven't gotten an exit signal on gold spot yet. There's nothing here. It's going to take us a while. No exit signal on gold spot. Jai, I just covered that specifically for you, like 20 minutes ago, man. I re-went into it just for you. But I'll cover it again for you here in just a minute, man. I keep my eye on the chat. All right. Let's see what BB has to say about this. Sorry. Hey, so we've got 1526, close above 1526 on gold. It's going to put us in a no trade zone. Again, like I said, we got to march back above 1600 to be looking to trending long on gold. So I'd look for continuation short signals. Again, there's not a primary exit signal. Minx has recovered from oversold. So if people are using that as an exit indication, then yes, then there has been one. But yeah, I mean, it's not really a good time to be going long on anything. All right. Like what is oversold? Now, silver, on the other hand, nice exit signal on silver, right? We talked about the potential exit signal yesterday, and that also went out in the premium analysis, my market analysis that went out to all of our premium members this evening. But yes, getting that exit signal on silver today. So at-risk shorts should be exited. We can see Minx similarly recovering from oversold, a little bit of waning, negative volume delta, and Parallax recovering from oversold as well. Silver still got a heck of a lot of work to do. Let's take a look at the BB. Not quite there yet on the BB. I would like to see price closing above 1294, maybe to exit all of my position. So maybe hold open on just a little bit of your silver short, just in case we gap down tomorrow, or excuse me, not tomorrow, but come Sunday's open, maybe you can squeeze a little extra profit out of that. But you should be at least 80% out of your silver short. Again, we covered this one on stream right here. Right here is the full signal, continuation short signal from Minx on the daily time frame, and from the continuation filter on the very next. So very easy short to catch. Let's go look at Bentley crude oil. Should now refer to it from now on as Bentley crude oil. All right. Nothing to do here on oil, man. Oil has been like the talk of the show, and the LTFs have been good to trade. Brent has been putting in a lot of good volatility. As far as the daily, looking for positional swings, still biased to look for continuation shorts to the downside. Looking to see if we can get one of those next week. But so far, nothing. We do need to close above 31,175 before we're out of the woods yet. Robin from the Hood asks, for continuation signals, do I calculate the position size the same? Like just double it, triple it if I get a bunch of signals, given if I'm already in the initial trade? Well, typically, I consider them segregated. So whenever I trade on a lower time frame, I trade with very small risk. So I mean, if I'm trading on the 15-minute time frame, if I'm scalping with my indicators, I'm going to be taking about 0.25, maybe 0.15% risk per trade. Because that's all you need to have a profitable day, depending on your capital. That's the difference between walking away with, hey, I had a down day. I ended up losing a couple $100 today, or I had an up day. I walked away with a couple $100 today. And that's the difference between taking 2% risk on the 15-minute chart, which is ridiculous, and saying, oh man, I had a bad trading day. Oh, how much did you lose? $2,000? That is unacceptable. It's unacceptable, right? Now, I mean, if you have a $200,000, $300,000 account, I mean, sure, if that's your 1%, 2%, right? But for most retail traders out there, you can't be losing $2,000 a day. Right? Like, what are we shooting for, right? Again, the way that I teach how to trade is my entire approach to trading is not a get rich quick scheme. I'm very different on everybody that's on YouTube, that comes on YouTube to try to like sell you some magical system. Like, no, most people think trading is like, all this fundamental analysis and you bet big and you become a millionaire overnight. That's not going to happen to you. It's just not going to happen. That's a fantasy. That's not real. That fantasy is propagated by professional trading firms and funds and outlets to get retail liquidity to come in and just drain them of their cash, because most of them just won't learn how to trade and want to just take massive risk, and they'll win big and they'll feel elated because the dopamine triggers in their head start dumping all the chemicals into their brain, like the same thing that you see when you watch adult videos, or when you do substances, or when you drink coffee, or when you eat a donut. All those dopamine, all those endorphins start rushing into your brain when you make a lot of money on a trade. But it's not sustainable, right? So the way that I trade is to earn active income, right? So again, regular livable income for most Americans is going to be anywhere from between $2,000 to $4,000 a month. Depending on your trading capital, you can bump that up. This all scales as you go, right? But the only way you get there to make consistent income in your life, to use trading as a form of active income, not to get rich, but as a way to work from home, live your own life, and have financial freedom, is to manage risk. Because it's just like playing poker. If you go all in and you win, you're a genius. But most likely you're going to lose, because you got a 50-50 chance. You trade can either win or lose, right? And then you bring your emotion in there. If you're betting with your whole stack, or you're betting big, you're going to make bad decisions. Sorry, I got off on a tangent there. But the answer to the question is, and so to finish that analogy, but if you bet reasonably and only bet when the favors are in your odds, and you don't lose your whole stack, even if you lose capital, you can continue playing the game and earn it back, right? But if you get wiped out, you're wiped out. You can't play anymore. And you got to go back to grandma and ask for a loan. Not a personal story from my first 3 years of trading. Let's see here. So anyways, the answer to your question is, take significantly lower risk, and then have a max cap on your risk. Like, so if I'm trading on the lower time frames, I will take, like I said, anywhere between 0.15 to 0.25 risk per trade, max of 2 to 3% risk, right? It depends on volatility, and it also depends on how many open positions I have and how much risk I have in the market. I don't like to ever go above 10% risk in any one direction. Like if I, and sometimes that number has changed over time based on volatility. But on average, that is a pretty good average right there. I think that number should be lower for newer traders. Most newer traders, I don't think, should be going over like 4 or 5% risk, total risk on, for their portfolio, until they've been trading for a year or so and they have it down and they are consistently profitable, and they can start moving those numbers up. But if you keep that risk low, and say you take a few trades and scale into a trade, you shouldn't be going above, 2% risk. And for most beginner traders, I'm going to say like 1% risk. So that means at 0.25% risk per trade, you have like 4 scale in opportunities, right? So you can scale in 4 times, you get up to that 1% risk, and then, your trade's either a winner or a loser, right? And then that means that, if you lose 2% of your account in a day, I mean, you should take a break for a week. That's the rules, right? We've got, we give all the premium all the premium members access to that capital sins of trading spreadsheet that I hope you guys are filling out. When you make those mistakes, you are supposed to be taking a break from trading, right? A week, a month, depending on how many cardinal sins that you make. And that's very important, because you have to build that psychological and mental discipline to be good at this game, right? It's easy if you just listen, guys. Psychological discipline just means following rules. You follow the rules, right? And that's what we teach in the group, right? Follow the rules. Just follow the rules. You don't follow the rules. I mean, every single trader I talk to that says they're losing money, I just ask them, okay, are you following your own rules? Well, no. That's why. That's why you're losing money, man. That's why you're losing money, right? You're just not following the rules. If you just follow the rules, you'll make money and you'll continue to make money statistically, right? Nothing's guaranteed, but statistically, you have the odds on your favor to make money, right? But if you're just not following the rules, man, you got to follow the rules. And that's why we do, I'm glad that we've ramped up community mentoring and, I'm getting time to spend with the premium members every week. So it's good stuff, man. It's good stuff. All right. Wow, we stayed on Brent crude for a while. Let's get off Brent crude. Now, listen, guys, I'm gonna let you guys know CFD that I'm watching right now. And again, this is the CFD. There are other ways to trade it for an American, but this is the US 5-year T-note. So bonds, right? You can trade this on, for non-Americans, you can trade this on a Wanda. They have the CFD on a Wanda. That's what I'm tracking right now. I like the volatility the CFD is. It trades overnight. The USBO5YUSD. This is the ticker symbol for the US 5-year T-note. And let's get the metrics up here. All right, so let's check this out. No trade can. This looks very similar to gold, right? Do you guys remember gold when we got this exact same pattern on gold, where we got the no trade candle, losing trade, no trade candle, and then we got the continuation, and the second trade was a winner? This is starting to look just like that. This looks just like that. This looks just like that setup on gold that we just had a couple of weeks ago. We talked about that last long that we took on gold. Didn't have a lot of follow through, but it did have a big wick to the upside. Now, 5-year T's have been consolidating at this resistance for about a week now, right? And getting this dip down below the daily baseline and now closing back above it, right? As our indicators begin to swing up. Now, I know Parallax has dipped to the downside and it's giving us an early warning, but I want to keep my eye on 5-year T-notes moving into next week and see if we actually can get some momentum to the upside. So previously, I had been concerned that nobody was buying. As I saw this go down, I actually expected this trend to continue because I realized that who wants to buy like our sovereign debt right now? Who wants to buy America's debt right now with our helicopter cash, style of doing things? But that has reversed as the liquidity crisis has crunched up, and we're seeing interest in buying our debt come back up. So cool. All right, keep it coming. So we'll see. I'll be watching that next week. So again, nothing right now, nothing to do, nothing to come on Sunday's open of the CFD, but one to keep your eye on, in my opinion. Moving to the futures markets of the traditionals, let's look what the CMEs are doing overnight. Again, broke that trend line that we've had for about the last almost 3 days now as we're moving into the 21st. Significantly, again, here's that backpedal, that BPC break pullback continuation to the downside. Beautiful short setup there on the ESs, same on the NQ, and same on the Dow. I didn't even plot the trend line for the Dow, but you can see the exact same thing. Same on the Russell as well. And again, not making, and making new lows, right? Wicking down there on the on the futures as we closed, but again, 2266.50 is where our futures ended up closing. A little bit better actually than the. Let's actually look and see where the. Yeah, closing significantly worse than the SPY actually did, right? Even with the SPY closing as it did, it's going to be ugly. It's going to be an ugly Monday, right? For traditionals, again, there's no ifs, ands, or buts about it, right? So. Yeah, that's how the SPY closed. And the futures pointed to a more significant dip. All right, so that's what I've got. Let's see here. Today in Forex, we ended up holding the Euro Swissy still to the short side, as well as the Pound CAD, holding those to the short side as we have for a while now. What did we get? Let me pull open. Ended up closing out the Euro Kiwi, the Pound Aussie, the Pound Dollar yesterday, and the Dollar Yuan. Pulled down and hit our trailing stop loss today. So only Forex trade that we ended up closing out was the Dollar Yuan. Nothing new for the daily. So again, just holding it on, absolutely crushing it. Absolutely crushing it in Forex. And I'm very, very happy that our members are doing so well with those markets. So if you guys want more information. All right, okay. We've got a lot to talk about. Before we do that, let me get back to where we're supposed to be. All right, a couple quick updates, of course. If you guys want to be updated to the latest going-ons in the market, again, we do post exclusive content over to our Twitter. That's where we're most active, and also on Instagram. You can follow us on there. The links are in the description below. And again, everything that you saw with the analysis is made possible with the Premium Indicator Suite. That and all of our educational material on how to use it is available to all our premium members. You guys can check out all the information about that. The link is in the description, premium.krakencryptocurrency.com. You guys can check that out. Happy to have you guys in our community if you want to get started. Now, we've got a lot that I want to cover today as far as the STEEM fork. I've kind of made my thoughts known about what's going on with the Cerveza virus. YouTube is still doing its thing, now not telling people when we go live as we continue to talk about what's going on around the world. So this is not really any different. Google is actually seizing up. Developers are having trouble working in Google right now because of everything. I was having trouble with Google earlier, so I'm not going to be surprised. Again, everybody is at home. Everybody is flooding the markets. Things to watch out for, legitimately, seriously, moving into the next month is cybercrime going up. So I wanted to say that as we kind of moved into talking about STEEM. And again, not very specific to STEEM. Not that I have anything against STEEM, but things to be aware of. We are moving into some pretty uncertain times, guys, and I do expect some rough roads ahead. I've been talking about this for a while. So when it comes to, nobody has your best interest at heart better than you do. And most, so if you have cryptocurrency on some fly-by-night exchanges, or if you have long-term holdings, things that you consider investments sitting on exchanges, now is the time. You have plenty of time on your hands. You do not have an excuse. Get a ledger, learn how to use cold storage, understand how to secure your cryptocurrency, because in times like this, again, we've seen a lot of crazy stuff happen in cryptocurrency, and these exchanges are centralized points of failure. I do expect to see cybercrime go up amidst all of this chaos, and that is not inclusive to cryptocurrency. It seems that hackers love nothing more than trying to steal Bitcoin. So make sure that you are protected. Keep the majority of your crypto in cold storage. Protect yourself, particularly in these times. I know it is very, very enticing to just make very large deposits, but again, that's why you can use platforms that you can rely on and that offer the use of margins, so that you can use less risks, that you can make less of a deposit, so you can reduce your counterparty risk should the worst case scenario happen. So make sure that you are being smart and secure with your crypto holdings out there, because unlike US dollars, if somebody takes your crypto, you will not and cannot get it back. So protect yourself, because as we move forward, should governments, which would not be surprising, continue to be absolutely incompetent with this situation, which they already are, then cryptocurrency is going to be very, very valuable as a medium of exchange. As liquidity dries up, as the ability to remit money, as banks limit withdrawals, as banks limit wire transfers, as banks limit remittance payments, again, what do you have? You have cryptocurrency that you can transmit almost instantaneously across state borders, right? This is what Bitcoin was made for, guys. This is what Bitcoin was made for. So protect your coins, protect your Bitcoin. Get a ledger. All right, so let's get into today's crypto currently. We're going to take a brief pause as we get set up for that, and we'll be right back, guys. Don't go anywhere. Now, didn't really mean for that to pop up, but all right. So our first story of the evening is obviously over the course of the past few weeks, we have witnessed an epic market meltdown. And there has virtually not been a single asset class that has been spared from the selling, with circuit breakers getting tripped day in and day out. Sometimes it does seem like the only thing, it seems like only one thing has been missing, until now at least, the implosion of a massive fund. Now, the Chicago-based Ronin Capital got margin called and forced to liquidate early today, marking the first major victim of the economic fallout that we're currently experiencing. CNBC broke the news today that one of the CME's direct clearing firms was unable to meet its capital requirements this morning, forcing the Chicago Mercantile Exchange to step in and invoke its emergency protocols to auction off the firm's portfolio. Now, Ronin Capital, their website does describe it as a firm that seeks the best and brightest traders and capital managers to embrace the firm's culture. Apparently, the culture that they try to foster does not include being able to manage your risk exposure. Apparently, that was left out of their training seminar. Now, CME's group chairman and CEO is Terry Duffy. He spoke to CNBC about this and the auctioning process, stated that they had completed it as of Friday afternoon, but they were not able to disclose who assumed the portfolios in the auction. Now, unlike a previous high-profile disaster on the Chicago Mercantile Exchange, which occurred back in 2011 when MF Global went bankrupt, that sunk customer funds along with it. The Ronin Capital implosion does not seem to have harmed anyone, any outside clients, as they only handled trades, they only cleared trades for the Chicago Mercantile Exchange itself. The chairman of the CE did clarify that with the clearing agreement that they made, Ronin is not allowed to have outside clients. So there weren't customers harmed in the process, which is a good thing. Good thing. Now, as far as what was behind the collapse, well, the CME Group raised margins twice this week alone. In the mini S&P 500 futures markets and the ESs, as of last week, margin was at 7,700, and by the middle of the week, it was raised to 9,900. And finally, late last night, they raised it again to $13,200 per contract, with Ronin finally unable to meet the margin calls. Now, CNBC broke the story, talked about how Ronin's downfall stemmed from the positions that it held in futures, which was tied to the VIX, the SIBO Volatility Index. Or put another way, it's a security that tracks market volatility. It's been very popular to trade with traditional market traders and futures traders, and it's unclear what exactly led to the margin call inducing stops getting hit. But there is word of an odd move in the VIX this morning, which may have tipped the scales against Ronin. Now, the auction, which liquidated their capital, was managed by the trust, the clearing corporation. It's also known as the DTCC, who end of day confirmed that they were done liquidating. But again, they didn't reveal any details as to who assumed the firm's liabilities, their portfolio. Now, the great irony being pointed out here is how Ronin Capital's website has an about section, which talks about how much of their success derives from their superior risk management experience and their unique approach to sophisticated quantitative analysis with years of proven trading experience. Well, it seems that they can forget such grand claims. Instead, Ronin's legacy will forever be one of catastrophic risk management and as the first victim of the 2020 financial crisis. And this just goes to show you that just because they got nice suits and just because they work in a big office does not mean they know what's going on. When this kind of volatility comes into the market, you got to know how to keep your head on you. And even the big funds are going to take a big hit because they've taken big bets. They're all leveraged to the hilt. And this is exactly why I am advising traders here to do the exact opposite. Reduce risk in highly volatile times. Reduce risk in highly volatile times. And the way that we as retail traders reduce our risk is with position sizing, right? Lower position sizes in highly volatile markets. Protect yourself or end up like Ronin Capital. Now, our second story of the day, I want to cover STEEM, right? Now, STEEM put in a big move to the upside yesterday, and we do feel that it's important to update you guys on the ongoing story of one of the leading blockchain-based social media networks. Now, we reported on this in mid-February. Justin Sun's Tron Foundation acquiring STEEMit Incorporated. That's the STEEMit or the STEEM blockchain development media DApp. Now, the acquisition, of course, kicked off a firestorm between Justin Sun and the STEEM community over who really had the rights to lead the decentralized chain, with the latter feeling that this was a hostile takeover in the making. And indeed, it pretty much turned out to be, because at the heart of the dispute was, of course, the massive pre-mined supply of the STEEM Justin Sun acquired when he purchased STEEMit from its founder. Now, that supply of STEEM could have been leveraged to vote in new consensus rules and direct the future of the STEEM blockchain, which likely included plans to port the chain onto the Tron network, which would have required a break of consensus, of current consensus. Now, the STEEM community, of course, moved almost immediately to neutralize the voting rights of Justin's newly acquired STEEM supply with the soft fork, which Tron countered with a highly controversial move in which several exchanges colluded with Justin Sun to restore control using the large supply of STEEM they collectively held on deposit. Let me clarify that. All the STEEM, and this is exactly why I advocate that people keep long-term holdings off of exchanges, STEEM that was deposited to exchanges for the purposes of trading or holding was utilized by the exchange as if they owned it, because in essence they do, not your keys, not your coins, to vote with Justin Sun. They took a political side of a debate. This is highly controversial and not what should be happening and could not happen if people held their own crypto. Now, the move provoked a great deal of backlash from the entire community, and the exchanges who participated in the move, including Binance, quickly withdrew their support. And the STEEM network validators, known as witnesses, soon returned to their governance role when the community rallied behind the validators loyal to the community and not to Justin Sun. Now, the drama has since escalated, with a number of members and validators claiming to represent the interests and will of the people of STEEMit, announced an upcoming hard fork scheduled for today, Friday, March 20th, right? And this hard fork is going to see the STEEM blockchain dramatically fork onto a node protocol being dubbed HIVE, which is going to port over the complete STEEM chain and all its data and supported dApps and extensions, including one major change, and that is unburdening the community from any affiliation or control from STEEMit Inc. Now, the result is going to require a new DPoS, delegated proof of stake chain, which they're calling HIVE. And while many dApps and projects currently operating on Steem are going to require rebranding, the community will remain otherwise intact, ideally, and functional moving forward, and effectively completely end Justin Sun's bid to take over the network, right? Now, it is being hailed as a watershed moment for blockchain and decentralization, with Block Trades, one of the leading validators, stating that STEEMit Incorporated and the supply of STEEM has nearly zero value now because it's old deprecated chain. And they went on to describe the situation on STEEMit. Let's actually see if we can pull that up. There it is right there. He went on to explain this on STEEMit, the company, the social media platform, explaining how when Justin Sun acquired STEEMit Inc., the blockchain and community contained strong value in the form of intellectual property, branding, and experienced blockchain and front-end developers. But now, all the developers and resources that Justin acquired are effectively gone. They have basically defected and taken the blockchain with them. Now, the validator Block Trades concluded his post stating that the community mostly wants nothing to do with Justin Sun, and that some members of the community are even willing to pay him to leave. Now, for most users and holders of the STEEM token, the supply will remain unchanged, and the developers plan to take a snapshot of all the wallets at a specific block height before allocating that same volume to wallets on the new chain. Now, everyone has been assured that tokens on Steem are going to be ported over to tokens on the new HIVE chain. That is, of course, everyone except for the Steemit wallets controlled by Sun's Tron Foundation. One major tweak that they are applying, however, is designed to counter the governance coup d'etat, let's say, that occurred last month. And that's the ability of exchanges which hold in their custody large supply of user Steem tokens. They're going to be neutralized from ever voting en masse when it comes to matters of governance. And this is in an attempt to prevent the likes of Binance and Huobi, who again colluded with Justin Sun and Tron to attempt to do this in the first, or, to change the governance rules in the first place. This is going to prevent this from ever occurring again, from exchanges using customer deposits to meddle with blockchain governance. And that's what escalated this entire situation in the first place. Now, although CZ, Binance, and Huobi both expressed regret for their role in the debacle, who cares? They did what they did. So in other words, rather than continue to fight a bloody fight over governance for the Steem chain using staked Steem to do the battle back and forth, the chain's leading voices have decided to take the community onto a fresh network denying Justin Sun his purchase. He spent money for absolutely nothing. Now, one of the big changes is, as I said, a change to the delegated proof of stake system, and that is designed to prevent an attack like this from ever happening again. Basically, if a user on the new blockchain stakes their tokens, they will not be able to engage in governance votes for 30 days, right? And Steem, of course, has a unique governance model which requires users to seriously lock in their assets prior to voting on governance matters. And this staking lockup function is known as powering up on Steem. And once someone decides to vote using their stake tokens, they can only be destaked or powered down progressively over a period of 13 weeks. It's designed to, prevent governance voting from just happening a la Rash, let's say. Now, because the exchanges in the takeover had to lock up their users' tokens in the coordinated attack, exchanges were left in an awkward position. Let's keep this. Remember this, right? Exchanges used customer deposits, staked their tokens, locked them up, and they were not available for withdrawal, right? Binance did this. Huobi did this, right? If you ever had any issues withdrawing your Steem currently, that's why. Left exchanges in a pretty awkward position, and an emergency hard fork had to be implemented. But they fixed this because they implemented an immediate hard fork to quickly unlock and undo the damage that whole move created. Let me break that down. Again, let me be very clear about this. Exchanges used customer deposits for something they shouldn't have done to modify the governance of a blockchain, and then hard fork the chain so that they didn't have to deal with the fact that what they did would require customers not to be able to withdraw their Steem. Now, Vitalik weighed in on this earlier, called it a watershed moment for blockchain governance if it ends up being successful, right? Let's go find his tweet over here. Who makes these? This is awesome. All right, so this seems like a potential positive watershed moment in the history of blockchain governance. If HIVE overtakes Steem, it would be a strong demonstration that the community is in charge and cannot be bought. Nice try. Now, Justin Sun, however, did not take too kindly to Buterin's support of the community and their proposed move, replying in his own tweet that he hopes that Ethereum Classic will overtake Ethereum as a demonstration that decentralization and the immutable quality of the blockchain is what really matters now. And now, I think that's right down here. Yeah, here's Justin Sun. Now, Justin Sun's reply was largely met with mockery, particularly seeing that Sun has tried to position Tron as a competitor to Ethereum, as well as being criticized for shamelessly plugging Tron at every opportunity. Still, the whole drama has shown that a decentralized network cannot be merely purchased outright with money by a single entity, and if the greater community wishes to wrestle control away in favor of their own interest, voting can take place on a chain like Steem to adjust consensus rules. So we'll see. We'll see who kind of wins overall in the battle. But a pretty interesting watershed moment, a chain saying that they can't be bought. But again, this brings in complications. So again, be very careful with untested technology, guys. Anyways, let me know your guys' comments and thoughts in the section down below. With that being said, I want to go check out your guys' thoughts and opinions. I'll answer your questions in our Q&A segment. So let's go see what we have going on. Let's bring back up the charts so we can monitor and watch price as we do this. All right, so I want to show Jai English how to set those higher time frame baselines. Let's take a look at ProShares. So I already went over the SPY for GBU Wally. Shout out to you and Gunbot University, my friend. But let's look at ProShares. This was ProShares down here, but we'll pull up the SPY here. Now again, what's interesting on the SPY is that we did get this modified Minx exit signal right here. Take profit short signal. Again, Minx has been kind of crazy with the TPS on the daily for the SPY. So again, largely just been ignoring the TPS because it's just not all this consolidation in oversold territory. It wasn't designed for the SPY. It works okay on it. Again, that was actually one of the reasons why I created the modified Minx in the first place. So let's just look at the trade that it did give you, right? Let's just look at that. Okay. Thank you. Thank you very much, Minx. But let's bring up our indicators here. So the reason I want to look at SPY is because we're going to see the inverse of this in a little bit and understand that they do trade slightly different. Even if we look at SH and SDS, we can see that they do give us some different signals, right? So again, as I talked about in the analysis that went out earlier, getting sold into on dividend day, on T-Day is weird. And it just goes to show you how bad things really are. But again, we are still in clear bearish territory on the daily time frame. Far below the baseline, the SPY has got to get back above 274.29 before we can even talk about even potential bullishness. Looking at the BB system, again, would suggest the exact same thing. Again, not really looking for anything until price can cross and close above 248.11. That's going to be putting us in a no trade zone between that area, but shorts are not invalid. Shorts are not invalid to look for until 248.11, until we close above 248.11. And again, I'd be a little cautious. Monday is going to be a bad day because we are going to gap down. Look where the futures closed. We'll see if we get any kind of bounce or rebound or any kind of upward momentum. Again, Minx is moving up. Minx being a little predictive. We've gotten double, almost triple bullish divergence on Minx now. But again, the selling pressure to the downside, the momentum to the downside with everything that's happening, we've got a long way to go, right? We just broke through that, even that meme trend line, right? The meme trend line on the SPY. Broke through it with an absolute vengeance, right? Broke through it with an absolute vengeance, right? And that's where everybody was like, well, this is just a return to the mean. Oh, it was a return to the mean, then a back test and a rejection, right? It's the exactly last thing that you want to see. So again, let's cover SH. Now, I still have my SH position open, right? I'm flat on SDS and I don't have any open SPXU trade right now. So let's see, kind of the same thing that we see here 2 days ago, getting the exit signal in the opposite direction. Minx curling down. What I'd be watching for here is a continuation signal on SDS. Again, fundamentally, I can get driving into it and expecting the continued breakout. But for me, the signal just isn't there yet, especially as Parallax has started to work its momentous way down. Momentum is declining on this movement to the downside. Parallax is our confirmation indicator. So if we end up going back down below the zero line here on Parallax, we're actually going to be looking at positive momentum on the SPY. So again, for me, I think that the SH trade is slowly coming to an end. In the low term right here, it's been a fantastic ride for me, and I'm going to be looking to continue to use this as my main shorting instrument and hedging instrument. Now, the SH, I won't actually close until we get confirmation, either when we close below the baseline on SH, or if on the BB system, which will happen before we close below the continuation filter, which is currently sitting at 29.29. So I want to know for sure that the market is going into consolidation, of which it's a good time for me to begin allocating cash or holding cash on the side. Again, my strategy right now moving forward is cash is king. So I want to be holding on to cash and looking and waiting and being very patient for those entry opportunities, because if things get worse, we've got, we are still significantly overvalued compared to corporate earnings at the very least. So I don't see anything here on the daily for SH. Things are good. Looking to the weekly, again, we closed above the, we got to change. Let's get rid of this. Let's look at this. Change this to 30. Looking at the weekly 30, we closed above over here, got initiation right here 2 weeks ago, and we have had a wild ride of a time, right? The weekly is starting to get a little overbought, but again, in trending markets, overbought matters less than oversold. Oversold matters in trending markets more so than overbought does. So keep that in mind, my friend. But I am glad that you had your eyes on that one, my friend. That makes me happy. Next question comes from Crypto Rick. Okay, he says, with Forex, if you haven't hit take profit 1 by Friday, do I take profit, lower risk, or keep holding? No, I let the trade play out the way it's supposed to play out. I don't have, there's all this like, well, you don't hold the trade on the weekends. I don't do anything different, right? I just can't trade on Saturday. That's it. And most of Sunday. You're asking me to take a look at the dollar Swissy and the dollar yen. I'm happy to look at them. As far as holding or look to take profit, that's going to depend on your entry. That's going to depend on your trade, man. Like, I mean, have you gotten trade invalidation? If not, you let your trade play out, brother. There's no data that's gleaned from the chart and looking for early, because again, like we don't know, right? Looking at the dollar Swissy again, Parallax just flipped bullish on today's daily move. We're above the baseline. Oh, hold on, I need to update this. Yeah, I don't see any trade invalidation on this, man. Yeah, I mean, I know that's a scary candle to look at, but the way we trade, man, we let our trades play out, right? So your take profit's where your take profit is, and your stop loss is where your stop loss is, and you manage your risk, and it is what it is. I don't see any invalidation on this. And USD/JPY, dollar yen, same thing. In fact, you just got your first long signal over here, right? Breaking Bitcoin system gave you the same long signal on that exact same candle. Parallax confirmation just now, right? So I could see a dip here, but I mean, I don't know which way the market's going to move, my friend. But I do know how to make profitable trade setups. So I would hold your trade with the original. That's always my recommendation. I would hold your trade with the original settings, with your original take profits, and make no modifications. Because when you start making modifications, when you start looking at the chart and looking at data that has nothing to do with your system, you're going to start to doubt your system. And if you have a back-tested system that works well, then you just let your trades play out, man. You let them play out. What are my thoughts on the UK today? Governments are going to pay 80% of people's current wages, no tax to pay for a year. Helpful for now, but not so much. Listen, I think that's a terrible move. But B, I think that this is largely going to depend on how quickly that people can get back to work, right? The longer that people stay out of work, it doesn't matter how much money government prints, because the government printing money means nothing without a resultant increase or a maintenance of existing goods and services. We were already in inflation. We were already creeping into inflation with the current supply of goods and services, because money was being increased without a resultant increase in goods and services. And now we're seeing an absolute gutting of the availability and production of new goods and services. And that is not going to stop. That ratio is going to continue to widen. The value of the dollar, the value of currency is going to go down as the value or the quantity of goods and services goes down until they let people go back to work, right? So again, that's That's how it's going to work, man. Like that money is not going to buy a lot. There's not going to be a lot of goods and services if they don't let people work. So it depends on how quickly they can let people go back to work. And long term, I mean, listen, I'm okay. I understand some of those. Listen, so I originally just said a few moments ago, I think that's a terrible idea. Listen, I understand that governments are going to take, I understand that governments are going to be taking fairly drastic measures to provide economic stimulus and aid to individuals. And that's fine. People do need that aid and support. I understand that. That's a good thing. The problem is that governments, as the old saying goes, never let a good crisis go to waste. What governments around the world are doing is they are utilizing this opportunity to stuff in a lot of pork with a lot of these measures that the average citizen does not want passed, with measures they don't want passed. And so they're instituting things that are not designed to be sunsetted, right? And are very easy to expand. Once government assumes power, it's very difficult for them to give this up. If Star Wars Revenge of the Sith taught us anything, it's that once you give executive privileges up, they do not like to return those executive privileges without a few Jedi busting up in your office, right? And even then, right? You know, Mace Windu couldn't beat the Emperor, right? So, yeah, it depends on how quickly they let people get back to work. And again, as I said, it makes sense that we're on, it makes, you know, we start to talk about like, okay, this pandemic is already going to kill X amount of people, right? And we've potentially reduced that number X amount, right? We don't know if that amount is significant or not, right? We don't know if the measures that we've taken, again, looking at Italy, it's unclear if the measures that we've taken are going to be very effective at all, right? And they've ensured a global recession for all of the developed world, and that's going to be even worse for the non-developed world. It's going to be even worse, right? So we were already in a bad spot. I mean, listen, the pandemic is an absolute tragedy, right? It sucks, man. It sucks. We were already in a bad spot with that in the first place, but what governments have done around the world has resulted in an absolute grinding down of the economy, and this has repercussions that go beyond the pandemic, right? You know, millions of people are going to lose their jobs, right? Millions of people are going to lose their businesses. Like it's done. It's already done, man. Like, so we begin to talk about like, you know, was the damage worth it, right? Because listen, if it would have saved like, you know, so many lives, then absolutely, right? But it's unclear whether these measures are even effective, right? In the long run. So we'll see. Doing everything we can to flatten the curve, but we can't stay locked down much, you know, for very long. We can't, right? Or you're going to see an increase in crime. You're going to see an increase in civil unrest, and people aren't going to be okay with just sitting at home and not having anything to do, and seeing seeing money go into quickly start to spread into hyperinflation, right? If, like, for example, if we go on a 6-month lockdown, you're going to see hyperinflation, right? Because there's no goods and services being produced. Good question, though, man. I can get a little intense sometimes. Don't think like I was coming at you, man. But like, yeah, thank you very much, man. Very, very good question, man. I appreciate the support, my brother. Hopefully you're doing well tonight, Crypto Rick. And now Jai English said, "Hey, Justin, sorry, can you go over how to display the higher time frames on the lower time frames, please?" Sure. Specifically to the baseline indicator. So we'll just throw the baseline indicator on here. All right, so here we are on the dollar yen, and this should work by default because by default, when you open up the settings, you're going to have your baseline type, your length, your source, and then your baseline time frame, right? So you just go down to the lower time frame and you just select the baseline time frame. The daily right here it's daily by default. And then you can adjust all your ATR settings or everything that you want. If you want your no trade qualifier, this is all in the user manual that I updated today, by the way, that's available in the premium drive. And And then looking specifically at Minx, we just go to Minx and we make sure that we set this to, for baseline options, daily time frame baseline, or excuse me, daily time frame baseline filter of signals. Boom. And make sure that our baseline is the same as our actual daily baseline. Now we'll only get signals in the direction of the trend, right? So here on the dollar yen, we get our long signal right here. That's a loss. We hit the stop. Continuation long here. It's a win. Continuation long here. That's a win. Continuation long here. That's a win. Long. That's a win. Continuation long for a double up. That's a win. Continuation long. That's a win. Continuation long. Is that a down candle? Yeah, it's a down candle. Continuation long. That is a win. Continuation long. That is a win. Long signal. That is a loss. Yep, just barely, but that's a loss. Continuation long. There's another loser. Continuation long. That's a win. Long, that's a win. Continuation long, that's a win. And back into going long over here. And yeah, so just very, very simple. That's how you set those up. B-Flow, Litecoin, BTC on the daily, por favor. Yeah, Litecoin on the daily is broken down below the daily baseline. Minx is bearish. We're getting negative and a powerful signal from Wadatar explosion 2 bars ago, which is why one of the reasons why I exited my position. And Parallax is bearish as well. So yeah, not looking good for LTC. I do actually expect to see lower lows on LTC BTC. And Boris Fredman says, "Hey Justin, I'm short the $6,500 call strikes on Bitcoin expiring March 22nd at noon." UTC time. Thoughts on price getting above there by late tomorrow night. Let me think about it. Sunday at noon. That's a terrible time for the strike to expire. So much volatility in between now and then. Are we going to close up there? I mean, honestly, I don't know, but so listen, the statistics are there that we don't because we are below the baseline. And it's, again, the reversal baseline bounce is a statistically good setup, particularly on the first try. Again, we might have gotten our harumph here. Again, I do have that limit bid sitting up at 72, so it's possible that we push up there and get that. In that case, then yes. Although I think that noon on Sunday is a terrible time for an expiration based on intra-week or weekend volatility, I think that overall, this isn't too bad. I think that's not too bad of a position. Just, again, manage your risk. Options are a little tricky. I'm not trading BTC options currently right now, but it is less likely that we close above 6,500 on Sunday than we close below it. So the stats are on your side. All right, let's open up the chest before we go, guys, and then we're going to start moseying along here. Distributing rewards. As far as the definition of flat, now PUBG, thanks for the follow over there on DLive, my friend. Robin from the Hood, thanks for the lemons, man. Star Wars reference just for you, my brother. Man, water went down the wrong hole. Flat just means I don't have a position. Squeaky Tadpole, Robin from the Hood, the Pie Guy, and Ricky T bringing it in big on the wins tonight. Can I show us my watch, please? Yeah, sure. It's a gift. Jai says, if we don't have the CC baseline indicator, how can we do it? Well, what you can do is you can use the CC EMA indicator. It won't be integrated with the signals, but you can use the free CC EMA indicator, which you guys can throw out your charts at tv.krakencryptocurrency.com. You can search it for us on TradingView. So I do have the multi-time frame function here, and with the CC EMA script, which is free to use. So just set your, by default, moving average length 1 is 8, and it's an EMA. So we'll just turn off. Let's go down. We're on Bitcoin. Let's go down to the 15-minute chart. And we'll go to our CC EMA here. And we'll say turn off, uncheck multi-time frame feature. And for multi-time frame features, select different time frame. We'll select the daily. And there you go. Now we have the daily 8 exponential moving average. And you can change that. You can change the EMA to whatever you like. I've got all the smoothing options in there. So you can change, if you want the whole 60, you can change it to the whole 60. So that is one way to do it. Yep. The Pie Guy says, is there a way on Webull to execute a trade now? Yeah, select good till cancel instead of day in trade execution. GTC instead of day. It's day by default. You want to select GTC. All right, guys, with that being said, thank you guys so much for joining me for another episode of Breaking Bitcoin Market Analysis. If you guys would like access to any of the stuff that you guys saw tonight in the world of charting, make sure to check out what we do in the Discord, discord.krakencryptocurrency.com. Links are in the description for everything that you could want. And again, we are having our Bitcoin trading competition. I'm going to move this thing to the down. Move that thing down. Boom. Never happened again. Let's try that again. Boom. Links in the description. There's 2 days left to register. Minimum balance of 0.05 BTC is required for the competition. Come trade with us. Come show us up. Make sure to subscribe to this channel on YouTube. Turn on all notifications and let us know in the comment section down below what you guys would like to see on Sunday. Look forward to some more cryptocurrency interviews from San Francisco Blockchain Week to come out this weekend, as well as excerpts and clips from the show this week in our Breaking Bitcoin Bits segment. You guys have been absolutely fantastic. Any other thoughts, comments, sarcastic remarks, or death threats you can leave in the comments section. And I will see you guys all back here on Monday at 9 p.m. Central Standard Time. We will be broadcasting next week in the evening still, as we are accustoming to the new time slot. So hopefully you guys are cool. Tell your family, tell your friends, tell people you don't even like. You guys have a fantastic evening, and I'll see you guys on Monday. Make sure to hop in the Discord, because we are going to be breaking down this volatility all weekend. And for premium members, I'm going to be publishing a lot on TradingView this week. So keep your eyes out for that. You guys have a good one.